Welcome back to the channel, guys. Happy holidays. I hope the stock market was as good to you as it was for me. You can quickly see by looking at my daily close snapshots that it was a pretty good week for me. We didn't have any red days in terms of the daily close snapshots, so that's pretty cool. In this video, I'm going to be doing my portfolio weekly review. This is where I go over all my trades for the week. I'm always transparent and show all my trades, even those that I'd rather not show. Those of you in my Discord know that I played some Tesla this week, and I wouldn't recommend doing it, yet here I am doing it. So let's go ahead and jump right on into this. So first off, for the week review, my net lick is up to 179,500. So overall, my account's up $4,700 or 2.62%. And it's just crazy to think about how great options are. Like, since I started tracking my net lick in the spreadsheet back in September of 2020, my account started at 94,000, and now we're up to almost 180,000, like almost double what it was. And if you look back a little bit, I mean, at one point it was more than double. I was at 202, but then I got a little crazy and started playing Baba and Wish and lost quite a bit of money, dipping all the way back down to 165 at one point. But now we're back on track. We're making our money back, letting Theta do its thing with some small Vega opportunities that come up here and there. My realized premium for December is up to $7,700, which is insane. Going over the quick overview, year-to-date total, $47,000 realized for the entire year. So it beat 2020, obviously. I also have 3 more months of trading. Then again, I also had 4 negative months, whereas in 2020 I had no negative months. So keep an eye on that, moving on to next year. And then next year I'm going to be moving into my other spreadsheet that I released and transition over to that, copy my stats over and all that. So you'll see my new one in future videos after this week. So now looking at the trades for this week, I didn't do too many, even though I had the week off. But I did put on some of the ones from my video that I talked about on Monday morning. And then I did do the Palantir attack the wheel strategy that I talked about in a previous video. So first off, I did sell the 22 covered calls, which was my assigned price on my Palantir play. And then I also sold some puts at the 16 level. If we zoom in here, you can actually see like these play out. I know United Broke is a little weird how they turn spreads into a combo order and you're buying that combo. Even if you receive a credit, it shows that you paid a negative amount. So it's kind of confusing to look at, but it makes sense in its own weird way. So Palantir, I did sell some puts. I sold some calls against my share. So I think that's called like a covered strangle or something like that. But anyway, so there you go. I did do what I said I was going to do. Then on my Monday video, I talked about looking at some leaps to buy, and I did end up putting one of those on, LUV. Although this week it looks like all 3 of those leaps that I talked about are up significantly. And even though you have multiple years for those to play out, you could have made it a week trade and locked in some gains, so that's pretty cool. The DocuSign, I did put on 2 of those bull zebras. And what I did was I bought the 145. Sorry, I sold the 145, and then I bought 2 135s. And overall, that cost me, I think like, well, right there, $25.90 per trade. So about $5,000 to have 2 bull zebras on DocuSign, and that's up significantly right now. So that's pretty cool. Beyond Meat, I did have a 60 put on Wednesday, I think this was. I decided to close it out because only a couple cents to close it and lock in that gain in case something crazy happened going into the holidays. And then Friday, I kind of went crazy. This is not something that I would recommend doing. So Tesla shot up to like 1030, and I was looking at the candles from previous days, going years back, and very rarely does Tesla go up 60 points and stay up there. So I figured I could sell a 1060 bear call against it and make some easy money because that was trading, well, you can see the spread was trading at 110 back then. So Tesla would have to move up 30 points against me to even make me worry about this position. Sure enough, it did start to move against me, and then I decided to keep buying more. It's like, this is not going to hold. It's not going to hold, and kind of goes against everything I've been saying. Like, keep your position sizing small, and I jumped off the deep end. I guess this was the market's gift to me, was let me out of this position without taking on a huge loss. Because at the end, I was up to 12 contracts, and if the spread is 20 wide, that's 2,000 per contract. I had 24K at risk on Tesla on Friday or Thursday, which is just honestly just stupid for my account. I feel like uh, the extrinsic value was still high when I kept putting more money in, because I just wanted to capture that extrinsic value because they was going to eat away at it quickly. But my position sizing went horribly wrong on this trade, and I'm kind of lucky that Tesla stayed flat at 1160 ish, 1165. So I didn't take a huge loss here. At one point, I was staring at negative 5K for this play, and just had to wait it out and hope for the best. That's not the kind of trading that I want to be doing. But this is how I got out of Tesla with a gain. Just totally not recommended. uh, the point of a spread is to define your max loss, but that goes out the window if you're willing to continue to put on more contracts and expose yourself to more risk. So just something to be aware of. We all get bit by the greedy bug. I got bit by it on Thursday, and I got lucky that the only symptom was I came out with a little profit. It's just some bad trade in there. So let's go ahead and look at the chart for like the 1060 call that I was doing. So I'm gonna right click it, make a new chart. All right, so basically when I did decide to get out, it was during this dip here. And as I look close, they spread out for $6 each. My cost base at the time was like $6.34. So I just got out probably right at the bottom of this candle and waved goodbye to the position. But had I held onto it, which, to be honest, I couldn't do it because my position size was horrible. Later, I could have closed this out for like 250, maybe less. And that would have made me like $4,200 this week, or on just one play, which is just kind of crazy to think about. Like, it's so easy to get greedy with options because the payoff is pretty huge if you're right. Anyway, now let's go ahead and look at my current positions. You see that I have nothing expiring next week. I don't plan on being active next week. You can see the new positions I have here. Palantir, obviously I got assigned at the 22 level, but mine's the premium I receive and I sell those puts. My cost basis is 2165. I have a cover call sold at 22 against this position. So right now that's down. And as long as Palantir stays above 17, I'd be fine with it. Like, I don't really care. And if it does dip, then I just double down and lower my cost basis. So like, that's just a stock that I'm fine holding. So it just feels like a free play to make more premium off of. Looking at some other stuff here. DocuSign, these are the bull zebras. And you can see that's up 25%. The profit potential is unlimited. Every dollar goes up, I should make about $100. It's just a sweet play. Actually, I'll make 200 because I have two of these on. So at 13, then I assume DocuSign is up about $6 from when I put this on. KMB, we do have a leap, and the PMCC running. Both the short and the long are profit right now, so that's pretty cool. It means Theta's doing its thing. There's really no position in here that I'm worried about at this point. If the Tesla stuff was still on, I'll tell you that's where my focus was. But right now, I really like how this is shaping up. I have a lot of different sectors on. My contract sizing is getting a lot better. So my notational value per position is getting better. I mean, it's still not the best, but it's a big step in the right direction. Anyway, I think that wraps this guy up. I think next week I collect some dividends, which should be pretty cool, since I have all these new dividend income ETFs in my portfolio. I hope you guys weren't glued to computers trading the entire week. Enjoy some time with the family. And then see you guys next week.